Hey, Dan Huss. It is great to reconnect with you today. And we had a chance to talk about some of our shared backgrounds, actually, which is kind of interesting. We both worked in the fintech world in a really different way. I had a chance to be leading the advertising team for a big credit union. So we worked with some big vendors like Fiserv and NCR, and of course, your experience at State Street. What are the three kind of overarching trends that you've been seeing since working on Gravity these days?
Hey, Dan, good to do another interview with you. There are three major trends that are affecting the financial space, and of course, fintechs in particular, with respect to AI and data science more broadly. And that is digitization, automation, and prediction. Digitization being, of course, the precursor to the other two trends, which is required, where you take old analog data and turn it into digital data, which is obviously required to be mined. Then the second trend, automation, then uses that data to automate previous tasks that were done manually by humans. And then finally, prediction, which is used, you take that digital data and you try to make obviously predictions about future events or predictions about individuals' behavior based off of that data that has been trained into the AI itself.
Okay, Dan, so let's talk about the top 5 use cases you're seeing in the fintech space. First one we had talked a little bit about was what's happening with tech extraction from documents.
Yeah, so this is, again, part of that digitization as well as automation trend that I brought up, and is kind of a almost necessary today in order to exist within the world of finance. So this is typically it's called computer vision, but text extraction from documents is a subset of computer vision referred to as optical character recognition, or OCR. And it's where you basically train an algorithm to recognize text in a PDF or in an image. You can see why this is important. Amazingly, people still fax in forms all the time or send PDFs very frequently of things like invoices and purchase orders. OCR famously has been around in the world of reading text on checks. For quite some time. Anytime you've used a mobile deposit where you take a picture of your check, it's extracting the text from the image of that check itself. So OCR is one of those kind of core things that not just fintechs are doing, but you'll see all the large banks and institutional banks implementing. Famously, JP Morgan saved something like 360,000 man hours per year through a well-trained OCR algorithm that it used to extract, this text out of forms that were previously being manually entered in by individuals. This does a couple other things as well. So in addition to, these forms getting entered manually in the man-saving hours, it increases the privacy of the information because it's just an algorithm that's reading it and entering it in. Also, believe it or not, it actually reduces errors. Humans tend to be more prone to errors than one of these really well-trained algorithms. So you basically have a threefold benefit when implementing OCR. You get that, again, that automation, and of course, the storing of the digital data itself. You get the automation, you get the enhanced privacy, and the enhanced accuracy of information that you are storing.
Great, excellent use case building block to start with.
100%.
Okay, Dan, let's move on. We're talking about the top 5 use cases, and let's talk about number 2, and that's something you've mentioned around automated risk assessment.
Yes, so it is critical at the scale with which fintechs and financial institutions are working today to have some sort of automation when determining levels of risk. And what do we mean by risk, right? So this could be, default risk on credit or loans. This could be fraud risk in terms of, are there fraudulent payments happening? These are just great examples of places that data science has made leaps and bounds because there's an enormous amount of information regarding individuals' payment histories and an enormous amount of payments that happen every day. Far too much for any individual to be constantly monitoring. So this is a place where data science has really accelerated our ability to automate this type of risk. So if someone is interested in getting a loan, you can pull up a profile of them using a number of different factors. And this is, where you basically can get instant mortgages approved online, which, imagine trying to do that years ago. It's crazy to even think about, getting an instant mortgage approved, but that's something that's setting some places, apart from their competition by being able to do this. And then, of course, being able to detect fraud, which is huge, and it's a major liability for fintechs. And if you're able to do things like automated fraud detection in your payment transactions, that's going to save an enormous amount of headaches down the line, and be able to make sure that you're compliantly reporting back to the U.S. government.
Absolutely, we spend a ton of time working around risk assessment. And also security is also a big issue always. So this is here to stay, obviously.
Of course.
All right, number 3. Dan, we're talking about the top 5 use cases, and we've got to number 3. And that is something we're calling, for the purposes of our conversation, automated or advanced customer service. So what the heck does that term mean to start with? And give us some examples about how that kind of walks itself out in the marketplace.
Yeah. Now, this is a very broad category, as the name kind of implies. But there are a number of ways that data science, AI, more broadly, is helping with customer service. So there's things like sentiment analysis that you can run in real time while your customers are talking on the phone to one of your customer service representatives, or you can run that sentiment analysis while they're on a chat with one of your customer service representatives. And if the sentiment analysis picks up, say, it determines that there's some level of anger that they're experiencing, this might flag something in your system to be able to automatically route this individual to a manager, or alert your customer service representative, for example, that this person is, beyond frustrated in their voice, and now they've got, not just their own sense of recommending them to, someone higher up the chain or solving their problem. Now they've got a documented log of, this type of, service interaction that they can use to help justify, moving them up to potentially speaking to a manager, or working some other way to resolve their problem. So sentiment analysis is really one way that you can enhance your customer service. But there's so many others. And when we talked about the types of trends that are happening, one of the main ways is just through automation. Different types of customer service tasks that would have normally been handled by a human being can be recognized now by AI. For example, using natural language processing, or NLP for short, you might be able to recognize in a way that we haven't just been able to before with new technologies, types of questions that individuals are asking in natural language on your search, on your website, for example, to get to their issue faster. Or more commonly, where this is being implemented is in automated chatbots. And this is very, very common right now in the fintech space, because a lot of people have very high touch needs with their banking institution. So they want to be able to ask questions of a bot about their payment history, transactions. And it hasn't been until really recently that we've seen natural language processing excel enough to be able to support that. There's numbers of other ways that AI is affecting the world of customer service, but sentiment and enhanced NLP is definitely two of the biggest.
Dan, we're talking about the top 5 use cases, and we come to number 4 already, and we're going to call that sales prediction. So give us some specifics about what that means when you talk about a use case around sales prediction.
Yeah, definitely. And this obviously spans far beyond just fintechs, obviously into the retail sphere. Anyone who's selling anything, it can benefit from this type of AI. Where we're starting to see, though, fintechs and financial organizations really embrace this is in being able to predict things like customer churn at a scale that they haven't been able to predict before. And where retail organizations have been using this type of AI for a little while now, it's really just started to hit the financial world. So you might be able to detect, based off of a user's behavior, whether or not they're likely to lapse as a customer. And if you can predict that based off of a series of different types of behaviors that they're exuding, you can intervene. So perhaps, you start seeing that, Dan P is, removing funds from a checking account, transferring them to a different checking account. This might flag something based off of your behavior and the behavior of others, that you're a 80% risk to lapse as a customer. And at this point, the fintech can either make an offer, have someone reach out to you, ask you, if there's anything additional that they can help with or support you in. So be more proactive in types of churn. With that comes other types of ability to use AI to better satisfy your customers and better predict things like sales, such as enhanced segmentation. So I mentioned your behavior as a customer. Well, AI can now detect behavior at a scale that no human could detect, using other third-party information that we know about you, to segment you for better offers in terms of cross-sells and upsells. We can use the type of information that we have about you to make better decisions, automated decisions about how to send offers to what are called lookalikes that aren't customers yet, and the types of messaging and ad placements that might resonate with them. Really, AI has allowed us to use this enormous amount of information that exists about individuals to create better, more personalized, targeted advertising, both for existing customers and for potential customers.
Yeah, I just want to jump in quickly. I was leading the advertising team in my setting, and this was a huge part of our effort and our time. The segmentation, like you talk about, you used to be able to go to Experian and get certain files. That was one way to do it, but I think you're talking about a whole nother level using AI, and certainly needs to be integrated with your CRM to make sure that you're tracking all of those efforts. But it's here to stay, it's huge, and it's going to be super important in the fintech space and a lot of other spaces moving forward. Dan, we've come to number 5 of the top 5 use cases in fintech, and that is a big one, privacy and data management. So take it away there, a lot going on.
Absolutely. We've got things like GDPR, right, in Europe, which has been around for quite some time, that, in US companies still need to be very aware of when they're operating overseas. And obviously with the CCPA being passed, the California Consumer Privacy Act recently, which is going to be adopted by other states for sure here in the U.S. Privacy is going to become a matter of compliance with the U.S. federal government. So it's something that we're going to have to take very seriously. Now, the trouble is that because U.S. companies haven't really taken the forefront on this, as strongly as they should have, we're seeing hidden data, hidden personally identifiable data, or PII, in companies' large data lakes where they store that data. And many financial organizations have already gone to great lengths to protect and encrypt this data, the large guys, but fintechs, smaller organizations may have neglected some of this, despite being depending of the fintech, despite being in the same level of compliance requirements that the large guys might have. So with these new laws comes a need for increased ability to identify personally identifiable information in your data sets and manage it. And to do that at the scale of, when you've got thousands and thousands of customers and, millions and millions and millions of lines of data, it becomes very difficult to identify where that data is. So you see things now like PII detection algorithms that can go through your data and recognize where you might have PII that's not encrypted and extract that for you to be able to then go in and make changes to your database. That's probably the largest place that we're seeing data science being applied within the privacy space. Digging into companies' data sets. Certainly, however, there are other places where it's going to pop up where you're going to be able to use data science to just better encrypt your own data as a consumer potentially.
Well, fascinating conversation today, Dan. You started with the overview of the top 3 trends that you were seeing, and then we got into the top 5 use cases. Those being, tech extraction, automated risk assessment, advanced customer service, which was a very broad area we talked about, sales prediction, obviously, and then privacy and data management. This is constantly changing. As we know, what are you looking for? Where are you looking for with things coming down the pike?
It is amazing the speed at which data science is evolving, much faster than we saw, the early internet and early software, right? The speed at which it's changing is just astronomical. So it's very difficult to predict what types of capabilities data science is going to have out there, which is one of the reasons that we built Gravity AI, right? Is to try and future-proof kind of businesses against this changing landscape so that they'll always have access to these new technologies under a single location. But I think we're going to start to see better and more accurate models first. So, among those 3 things, digitization, prediction, and automation, we're just going to start seeing leaps and bounds increases in the accuracy of these types of models that have been trained on various data sets without necessarily even happening to have completely proprietary data sets to get these things up to increased level accuracy. Indeed, already we're seeing companies being able to use models with fabricated data sets and different types of algorithms that increase the data set size, which ultimately then leads to more accurate models. So that's kind of where this is going. But one thing that I'd love is, if you're a data scientist watching this or an enthusiast, where do you think we're going to see, AI and data science more broadly being used in fintech? And if there was an area of our discussion today that you'd like to hear more about, or for us to dig deeper in, leave us a comment. We'd love to hear about that. Thank you.
Great stuff. Thanks, Dan.
Thank you. Cheers.